Well, guys, the data this week is showing a pretty typical March for the Los Angeles real estate market. And that's not great news because a typical March means huge gains in pricing. Very tough for home buyers. That's what we're looking at in today's Los Angeles real estate update for March 11th, 2025. Let's get right into it. And we're looking at the latest weekly print from Redfin for the Los Angeles metro market. Each line represents a year. The green line represents 2025. The orange line represents 2024, etc. And we're looking at the median sale price of a home in Los Angeles, which right now is at $923,000. That represents a steep $37,000 climb in just the last 2 weeks. Unfortunately, this kind of price climb is typical for March in Los Angeles. And guys, when prices are climbing this quickly, you can't afford to blindly sign up with an agent and agree to pay them 3% or even 2.5%, even when the seller is paying the commission. Let me show you why. Okay, let's say you're a home buyer in Los Angeles. That's you, and you found an agent who will work for 2.5%. There's your 2.5% agent. But don't worry, the agent tells you, you're not even going to pay for that. We're going to get the seller to pay it in the deal. And here's our seller. Now, we're going to say this is $1 million home. The median price of a home in Los Angeles is $923,000, but we're going to round up a little bit to make the math a lot easier. So you offer the seller their asking price of $1 million, and the seller covers your agent's commission, which in this case is $25,000. Now, this little roundabout here is the bullshit logic that realtors use to make you think you're not paying them when you actually are. Let me prove it to you. Let's say you could afford this $1 million home, but you have to pay your agent yourself. Well, then the scenario would look like this. Here's you, the buyer. Here's your 2.5% agent. There's the seller. And in this scenario, you pay the seller $975,000 because you have to pay your agent their 2.5% commission of $25,000. Well, guess what? Whether the money weaves its way through the seller or not, in both cases, the seller ends up with the same total, $975,000. In both cases, you're paying your agent. When your agent says the seller is paying their commission, it actually means you're offering the seller that much less. It's true. Look, let's clean up this. If you're buying a home in Los Angeles and you meet an agent who charges just 1%, then when you make your offer to the seller of $1 million and the seller is covering the commission, the seller only gives up $10,000, 1% of $1 million. And so the seller ends up with a net $990,000. Now you tell me who's going to win this bidding war, the guy offering $975 or the guy offering $990? Every single time, it's going to be the guy offering $990. Telling home buyers that the seller is paying their commission is just a part of the scam that realtors are pulling on Los Angeles home buyers. I've exposed the full scam. I'm going to link to the video up there right now and also put the link in the description. If you're planning to buy a home in Los Angeles, you should definitely watch it. Now let's get back to the data. Now we're looking at new listing median price, and this is the median price at which new listings came to market this week. We're just under $1 million at $999,249. And we've actually seen a fall off of about $50,000 in the last 2 weeks. That's pretty dramatic. That's unprecedented. But so was the run up in new listing median price that we had at the beginning of the year. And now that we're over this hump, we can look back on what's happened and actually diagnose it pretty easily. I believe the reason for this huge run up in list prices simply was the listing of burnt down parcels in Pacific Palisades. Let me show you. Right now, we're looking at parcels for sale in Pacific Palisades, and all these listings are raw land. Now, this is a lot more than you'd usually get, and as you can imagine, there aren't a lot of pictures of the actual land itself because most of these parcels are houses burnt to a crisp. These listings all came to market in late January and February, just after the Palisades fire burnt down the neighborhood. And I think it's pretty clear that these listings, all of which are north of $2 million. Here's one that's just south of $2 million. But look at this. We're looking at parcels of land for almost $3 million, more than $3 million, $4 million. I mean, these are really high value listings. And of course, they're going to pull the median price up. And that's how we saw this dramatic uptick at the beginning of the year. It appears that those listings have stopped or at least slowed down to the point where they're not pulling up the median quite as sharply. And so our median is dropping. And it will take some time, but I do believe that our new listing median price will eventually get to something more normal. Now looking at new listings, this is the number of new listings that come to market each week in Los Angeles. This week we saw 1,446 new listings. Now our new listings numbers have been flat for the last month, but as you'll see, we're still about 20% year over year growth in this metric. And that's great. 20% more new listings coming to market each week means inventory growth in the Los Angeles market, which means downward pressure on pricing. Let's hope we get there. And, you'll notice the beginning of the year, we really climbed in new listings right along with the black line, which is 2022. And it's important to keep in mind that 2022 was an outlier. This is the period during which mortgage rates doubled, and a lot of people right at the beginning of the year listed their homes in order to buy a new home before rates climbed much more. So in the grand scheme of things, we actually have a lot more inventory coming to market than we did last year, which was a pretty normal year, and in 2023, which was also relatively normal year. So thank goodness we're looking at a somewhat inventory-rich environment in Los Angeles right now. Now we're looking at homes sold. This is the number of homes sold each week on the Los Angeles market. This past week, we saw 879 homes sold, representing 7.6% more than the same week last year. And for the last 4 weeks, our homes sold number has been elevated over last year. A week ago, we were at 11.9%. A week before that at 10.1%, a week before that at 6.9%. So even though more homes are coming to market than last year, we're also selling more homes than last year. Fortunately, more homes are coming to market than are selling, but still, these home sales are eating into the added inventory of our enhanced new listings. And now we're looking at pending sales for Los Angeles, and pending sales is a leading indicator of homes sold because a home goes pending about a month before it becomes a home sold. This week, 1,212 homes went pending. That represents an 8.5% elevation over last year's numbers. We had a small dip in pending sales this week, down from 1,230 to 1,212, and down from 12.4% over last year to 8.5% over last year. But largely speaking, our pending sales metric is in line with our homes sold metric, which means we shouldn't expect homes sold to climb dramatically or fall off dramatically in the next month. Now we're looking at active listings. That's what happens when you combine inventory coming to market via new listings and inventory leaving market via homes sold. And we continue to have this dramatic decline in active listings. I am sure now that this is some sort of tabulation error on Redfin's part and not what's actually being reflected in the market. According to this chart, this week we had 9,900 active listings on the Los Angeles market. Just a week ago, we had 11,454. That's about a 1,500 home difference. Is it possible that 1,500 homes left the market this week? Definitely not. Only 879 homes left the market by being sold. 1,212 homes went pending but are technically still in the market. And 1,446 new listings came to market. So even accounting for listings that were canceled, and those are homes that exit the market without being sold, even accounting for that, it's simply impossible that 1,500 homes left the market this week. And again, I don't know what's going on with this metric, but it's screwing everything up. When we look at weeks of supply, we also have this sharp decline. But if the weeks of supply numbers based on the number of active listings, of course this metric is going to drop because active listings is falling off a cliff. Again, I can only imagine for statistical or tabulation errors on Redfin's part, it's simply implausible that so many homes are leaving the Los Angeles market. One stat that we can still look at, even though the active listings metric has gone haywire, is average sale to list ratio. This is the ratio of sale price to list price, and this week we hit a meaningful milestone. Our average sale to list ratio popped over 100% for the first time this year. We're now at 100.1% average sale to list ratio. Let's see, can you see that while I'm sitting here? Yeah. Last week, we were at 99.8%, and this week we've popped up to 100.1%. Now, when the average sale to list ratio is over 100%, that means homes on average are selling above their list price, and that's an indicator of a market that's heating up and gaining speed. That's definitely what we saw this week in the price metrics, and this just confirms what our price metrics are telling us. I'll be posting my next Los Angeles real estate update in 2 weeks. In the meantime, check out my playlist, How to Buy a Home in California, for real insider tips on how to buy a home in California without getting screwed over. I'll see you in 2 weeks.